Click here to subscribe to our YouTube channel. You'll get instant notification of new videos as they're released. So when I was trading this week, I thought I'd make some notes because I wanted to come up with a little checklist of things that I thought may be interesting for you. And I thought, you know, as I trade, I'm going to just make some little notes and write them down. And I thought I'd share those with you. It's funny, actually, I've written them in 360 degrees, so I'm going to have to reinterpret these. But let's go through some of these notes. First one was courses tend to behave different on each day. So what I meant by this was that when you trade one particular meeting at one particular course, when I tend to go through the cycle of the whole first set of meetings. So it could be four different meetings or 3 different meetings. And I begin to get a feeling about which ones are trading better than others. And then when I come around on the second cycle, I can confirm that that's the case, as in orders filled quickly, markets are erratic, big price moves all over the place. And then by the third cycle, I've pretty much got a firm idea of which course I'm going to trade aggressively and which one I'm going to tone it down on. And by aggressively and tone it down, what I mean is if a course is trading well and I tend to be able to read it well and I can get my orders filled quickly and so on, then I'll start to ramp my stakes up on that particular course. But if it's not trading particularly well and I can't read the market very well, then the stakes go right down. That's part of my process of managing how those markets behave and how I respond to it. I can't read that one. What does that say? Oh, here we go. In weak markets, momentum is king. So this is basically saying when there's a strong move in a weak market, it tends to continue. And part of the reason for this is that when something gets backed heavily in a weak market, in other words, in a poor quality race, then the market tends to follow that up. The form lines probably aren't particularly strong on those horses. And as a consequence, when money starts to come from it, people see the money coming from it, start to put more money on it, which forces the price even more, and people see that and then copy it and blah, blah, blah. In either direction. It could be a drift or a steam. So yeah, in weak markets, momentum is king is another note that I wrote. If you choose one side, you'll get it right more often, or you will get it more often right, or something like that. It basically, when you go into a market with a plan. So you sort of say, well, I'm going to lay. And if you do that consistently, over the course of maybe 12 races or something, you're looking for lay opportunities, you're looking for drifters, then you tend to make much better decisions. And let's say that you're doing it completely at random. In 12 markets, you're going to get 6 of those right and 6 of them wrong. But of course, your skill as a trader will ensure that that balance will be tipped to maybe 7 or 8 out of 12. But the consequence is that you narrow your decision making to one particular style, and that's what you're looking for, and you will find it much quicker. If you go into the market and go, oh, what's this market trying to do? I think it's going to drift, steam. It's really hard to make that decision, and the market starts to bully you. It starts to push you around all over the place. So it's better that you go in to say, I'm going to look for something that's steaming, and I'm going to back it, and then you stick consistently to that. And all you do is you vary which one you're looking at and which market. You may not see one at all in the market, in which case you do nothing. But yeah, if you adopt a certain style, something that you're looking for, and you look for it, you will find it. And also, it makes your results more consistent. But if you keep chopping and changing your mind, you'll get beaten up by the market and by your own mind. So it's better that you go in with a plan and something that you're looking for, and then you adhere and stick to it. Now, I have a range of setups depending upon what I see in the market and how the market is structured, but that's an advanced skill and beyond the scope of this video. So my tip for you, if you're doing something, is try and stick to one particular tactic and do it very well. Easier to read a market with a long run-in. So basically, if you don't have much time between markets, that becomes a little bit more stressful and difficult to read. But if you've got a long time between markets, so for example, we had 2 today, and there were 15-minute gaps between the 2 of them, that was quite easy to see what was going on. You could judge the flow of the market much easier. I can't read that one. What does that say? If it had started too late. My writing is terrible. Oh yeah. If a trend has started, I can't believe I couldn't read that. If a trend has started, it's probably too late to jump on it. Probably. I'm not saying that for definite, but typically what happens is as a move develops and the price gets backed in and backed in and backed in and backed in, and you're thinking, oh, I'm going to back this, I'm going to back this, I'm going to back this, I'm going to back this. Yeah, I'm going to back it. Yeah, I'm going to back it right now. And then it starts to turn, because it's impossible for the price to head in one direction permanently all of the time. So if a trend has started, and it may already be too late by the time you spot it. And I've also put on here, prices interact ahead of anything else. So this is basically saying if the price on something is going up, then the price on something somewhere else must be going down. That's become more dominant over recent years. But that's something that I've made a note on as well, is that prices interact quicker than any other indicator you can imagine. So if you've got a position that's trying to go out and something's going out somewhere else, then that's going to stop that fairly quickly. So that was another comment I've made. There are a couple of others on here, but I think they're too complicated to explain in one little video. They require different videos altogether. But there were just some notes that I made this week that I thought may be helpful to people who are trading out for the first time or want a few tips or tricks or hints. So I hope that's been useful for you. If you're interested in learning more about BetAngel, its tools and the opportunities they present, then why not visit betangel.com today and download a free trial.